Good day, AVZ traders. I trust you are well. Welcome to broadcast number 90. Let's have a look at silver. High of yesterday, low of yesterday. Upper asset valuation zone is a sell zone. Bulls have to be exceptionally strong to break out above the highest asset value of yesterday and to keep accelerating upwards into the heavens. Now, this is what transformed for us today in terms of silver. First candle, gap up. Let's see if we can. Yep. Gap up. You can see the close of the last candle, close of yesterday. The open, and then the bull body. Gap up. But what we're looking for, of course, if we're going to trade this candle, is the first breakout, which becomes a large breakout candle. Here is the interesting thing. It's the first candle of the day. So what are you comparing to in terms of, is it the first breakout that becomes a large breakout? Well, you've got the candle itself to compare to. It's a brand new day. And when you look at it, tail below, that was bears after the gap up. At some point, we don't know whether market went up all that way or came back, but bears sold off and got down below the low of yesterday. Bulls came in, and again on the close of the candle, small tail, we never ignore this tail. Small tail is an indicator of bears selling into the close. Now, on the first candle, if you're going to call it first breakout, which becomes a large breakout, you really want to see bull strength throughout the whole candle. You know, small tail at the bottom, closing near its high. That's preferable. But when you get that, it's best to wait. And what are we waiting for? For follow through. You can just wait for the second candle. If you get it, then you can say, okay, I'm going to jump in. Where do I put my stop? But we didn't get that. Bears came in. At that point, we wondered, well, what happened to the bulls? I mean, if you can break out above the highest asset value of yesterday, you're pretty strong. Bears came in. It was just a test of that higher closing value, the highest asset value of yesterday. Okay, we're right there. Let me do this. Okay, that's the closing candle. But we're not testing the closing candle yet. We're testing the highest asset value. It happens to be the closing candle. So that's why I'm just being a little careful with myself. Bears came in again at some point. So a big bear breakout trend candle from the high to the low. And you'd have thought, if you're watching, oh, well, okay, so we are back in the sell zone. What do we need to do to see a sell zone? Well, let's close beneath the slow and let's wait for the follow through. So we have a candle that's completely beneath the high of yesterday. We didn't get that. Instead, we had bulls coming back. After this first candle, bears failing to even close beneath the high of yesterday. Bulls came back. So now we get a sense the market is starting to go up. So we prepare ourselves to jump in, but you're going to wait for strategy number 2. Then we get that low test candle. Now, guys, that is strategy number 2. But if you watch the, everything on strategy number 2, I emphasize this quite a bit. The fact that it's a low test is a good one, a good signal. But the only problem is it's pretty high, pretty close to the high of that previous candle. So that's the high of the trend. We're pretty close to that. And it's always lower probabilities if it's almost at that high, because then you probably just, get in and then immediately it fails because, the market might see that it's a bit of a small trading range and get a failed breakout. But it is still strategy number 2, signal test of the average price away from it. So the bulls are pretty strong. Also, the bears tried to break out again beneath the high of yesterday and they failed. So what do you do in this case? I would wait. Just wait for follow through and see if we get a follow through to that signal because of the concerns we've raised about the signal. Okay, if you want to get into it because it didn't break out above it, it is fine to do that. Just be aware that the higher we are closer to the end of the trend, that candle, the lower the probabilities. We still had bulls riling up quite fantastically. So let's look at it. If you were going to take that, there is a candle itself. There is its measured move where the 50 is, and your stop would go there. That is where your stop would go, just below that. But if you waited for the follow-through candle, legitimately, still valid. It's a follow-through candle because I didn't like that. Wait for the follow-through. And you rewarded with this bull breakout trend candle. Your stop can just automatically go to where your stop would have been, right? That's the place to put the stop. Or as it turns out now, if you look at it, it's also the same as the measured move. But you could just say, I'm putting my stop there, or you can use the measured move of that candle. And if you did that, well, if you did that here, excuse me, you would have banked 100% profits there. If you waited for the follow-through, because of the concerns we raised, you would have hit your 100% profit right there. So that's a beautiful strategy. Number 2, on silver, Asian session. The guys who are trading the Asian session, well rewarded, because since then, we've just been in a trading range. UK opened sometime in here, and we're just in a trading range. Are the bulls going to be strong enough to keep, going up? We got a bit of a trading range like that. There's nothing for us to do. The bulls have to break out above here, come back. Strategy number 2. There's no more strategy number 1. If the bears are strong, then I have to sell, come down here. That will be the low of today. Then we can assess that and decide. All right, guys, I hope you found that useful. We shall catch up again. So this is Dr. George, broadcast number 90. Take care and bye-bye.